And everybody, it's Tim Reazor with Revere Asset Management. Let's see here, just before 4:20 on a Wednesday night. So very quickly, stock owners, market lovers. Before we begin, look, I want to get to. I'm not going to bury the lead here. Does coin the stock crash? So we're going to do that in 2 seconds. I want to show you something because it's a lot of negativity out there, and I don't think coin crashes does not change that narrative. But I want to show you something that I found interesting today. John Erickelman is one of my favorite Twitter follows. And on this day in 1979, I mean, think about what's going on in the world in 1979, right? I think the Iran hostage crisis is going on at that time. I think it started by then. You have this high inflation, economy not doing so hot, and here comes the Home Depot with 2 stores. Interesting. And so always a silver lining out there, always a good time to start a good business. And so super interesting, and just a little bit of perspective here as the economy rolls on. And Jerome Powell talks to Congress and says, yeah, we could be hitting recession. And I kind of think that's where we're probably headed. But hopefully I'm wrong. But I want to show you a couple things here that I think you should be aware of. Levels, bearish levels for the S&P 500. I want to give you those. I want to show you this coin thing. And then my one last thing in tonight's video is super interesting. I think it's the one chart you need desperately to be following. So let's do this real quickly. I want to get a hold of us. I want to find out a little bit more about us. RevereAsset.com is where you go. About strategy is what you would click. And then you just scroll on down. You can see the portfolios right here, the hybrids, the cores. And then you can see us here. You see Hunter, Muriel, and then there's America's Fiduciary right there, DA Store. And then Don and Hunter manage all the portfolios. So what goes on the watch list, what comes off the watch list, what goes in the portfolio, what gets sold, profit taking, all that good stuff. You can find Don and Hunter are available to you. You can email them anytime. And I swear to you, they will reply. And that's separate. That's what separates us from every other, from all the strip mall advisors next to the vape shop and us. Like we not only give our strategy away, we make ourselves available to you. You can email me. There's my information right there, timrevereasset.com. And then if you're on a connected device, your tablet, your smartphone, just hit that button right there, and you will get Danny. Danny will pick up the phone, he'll talk to you, and you can ask all the questions in the world you want. Some people prefer this method. Twitter, I prefer Twitter. It's direct. It's like texting. You and I are texting buddies. My DMs are open. Oh my gosh, I just remembered somebody, new Twitter buddy, actually asked me about stock list. I just realized I'm not going to do it in this video because I want to talk about coin. So I'll tell you what. I know he's watching tonight. I will do stock list on Friday. I will give you resources on Friday. And I will make sure they're in the, when I say Friday, I mean the podcast. They will make sure they're in the show notes. Let me write that down real quick. I just realized it as I started the video here with you guys. So anyway, Friday I'll have a specific stock nerd market lover emailed, or he got me on direct message, said, hey, would you do this for me? And I said, sure, man, I'd love to do that for you. But let me do it in the video. And then of course, I've bumbled that. And so I will do it on Friday. I promise you that. And so, but Twitter's how you get a hold of me, at TJ Reazor and all that other good stuff. And then stock nerds, market lovers. Before we begin though, these videos are for what? Your edification purposes only. They're never ever to be misconstrued as advice. If you want advice, need advice, seek advice. I swear, all you have to do is, in fact, give us a call. Okay, so, and right there again, right there. And if you want to reach out, like you're like, dude, I don't want to call you, even though we're not going to spam you, and we promise we're not. I just want to send you a note. And I'm not really sure why the note doesn't work with the contact, but we'll get it here. There's the contact button. There you go. Let me see. You hit, I hit search. That's why I didn't hit contact. So hit contact, and then all this information populates right here. You can send us a brief message. Okay, so let's do coin. So to Tim, you're probably saying, Tim, isn't it down enough already? Isn't it been beaten down enough? And look, just because the stock's down doesn't mean it can't go lower. I know you know that conceptually, but sometimes you don't believe that. And so when you look at coin here, today wasn't that horrible of a day in the market, although it felt like it lost the way it closed. This is not a bullish pattern. And so if you start breaking it down, like we'll take it on a 78-minute chart here, you're like, well, of course, it's going to go the way crypto goes. This is not a bullish pattern. And so price-wise, if we get another down day, or when we get another down day, not if, but when, If this can't make any progress, look for this level, this 46 level to be taken out. But I think it goes lower than that. I think what you're going to see is a level, and I've got it drawn on my chart here down here about, we'll just call this 34 to 35. And so you're like, well, Tim, how much is that? You're calling this a coin crash. And so we'll just do a little shanty math here. So like if you go from this level, this price level down somewhere in here, that's like a 10, 11, 12% drop right in price, okay? From current pricing to the recent low at 46. If you take out that low and start going towards 35, you can see the number there. You know, it's not going to go straight down, but could Coinbase fall another 30%, 20, 25%? Yes, yes, it absolutely positively can. And so what would be the impetus for that? Like, this is really bad price action, folks. And so, and like, you're like, well, Tim, what do you mean? Like, this is really bad price action. Why does this stick out to you? Let me show you a 30-minute chart. And so here's coin, right? And like, that's not good. Like you can see that this looks like it wants to do this, but let me just give you a juxtaposition. So let me show you the SPX, right? The SP 500. So here's the SP 500 on a 30-minute chart. Well, that's a lot better. And like, well, what's better about that? Here, let me show you S&P futures. So what's better about this S&P futures chart? So here is my 5 exponential, my 8, my 21, my 34, my 50, and my 200, okay? And look, here is right 8 a.m. markets down. Jerome Powell starts speaking at 8:30, or his notes get released, and then you kind of hold this. I mean, this is kind of a bullish pattern, right? A bullish pennant. And you know, I don't know if it finishes, if when it's done making this pattern, if it finishes up or down, but I know that at least it has a chance to want to take out this 3,800 high and potentially make a run to the 21. We'll get into that here in a moment. But when you go back to coin, that does not look like that. That's just completely different. And at $51, there's a ton of investors still in here. Crypto may be the future for some, but it might not, you know, the future of upward price momentum might not be here for the stock. And well, Tim, how will you know you're wrong? Because I think you might be wrong. Well, on any price chart, I beg you to just look at a 5-8 relationship. A 5-8 relationship, you say to me, is a 5-8 relationship where the 5 crosses the 8 and gives you upward price momentum. And I've been talking to you about that for what seems like ever, but I think it's months. And you can find all of my talks. And I would go back to tomorrow's insights. I would click on podcast, and I would go back all the way starting at episode 400. So that's 1, 2, 3, 4, 5, 6 episodes where you'll see this whole picture being developed of when to get back in, when your capital is worth being at risk in this market environment. But is it now in coin? So I think there's something to absolutely be studied here. And coin is certainly on the bearish watch list, okay? And so something for you to watch at home. Now let's go to SP. I alluded to S&Ps. I want to do SPX. So SPX on a daily chart. So is this good or bad? And so no, this is a bearish formation, right? And so it's just dancing around here. Look, in a normal market, and I say normal, in a normal pullback, normal correction, one where the Fed doesn't have a double whammy, right? The Fed is doing 2x the tightening. What do you mean 2x the tightening? Well, they're both raising rates and they're selling off the balance sheet. It's 2 forms of tightening. It's the most aggressive tightening in our monetary policy history. Now, take that for what it's worth. And so, and we talk a lot about that. If you listen to those 6 episodes, and I implore you, I really ask that you do that for me. If you like our work here at Revere, I ask that you watch those 6 episodes or listen to them wherever you get your podcast. So you get rejected at the 8 today, but you close above the 5. So what does that mean? Like, is there something to be gleaned from this? And I think so. And I want to go down to some smaller time frame charts. And I'm looking here at the 30. 30-minute chart. And so what can be gleaned from the 30-minute chart at SPX cash, not SPX futures? Well, look, I think if you're looking at this objectively, like gap up today, well, Tuesday, excuse me. Here's Wednesday, hold the gap. That's super bullish, right? And then look, I mean, Jerome Powell states the obvious today at the party. We could go into recession. I know everybody knows that, right? That's the big fear overhanging the market. But look, if this doesn't break, if you don't take out this level and start clearing what I have drawn on my chart is 38.14, if you don't start clearing that level, you need to start looking back to running some projections off a recent low. So let's do that. Let's do that together. Let's get our little fib tool. Let's find a recent low off that 30-minute chart that I'm looking at. Let's run on a low. Where do I see, where could potentially this market stop to? So look, and it's a market. It doesn't have to do anything that I'm saying. I know you know that, but there's some people that will email me and say, the market didn't do what you said it would do. It's like, it's a market and anything can happen. When you go into the market, you forget that it's literally what people are willing to pay for things. And it changes second by second. And so I'm giving you what I'm seeing on the charts. And look, I've never flown a helicopter mission where the mission didn't change. And we were always constantly course correcting. And so the market is very similar in that regards. And I think that's got to be your approach, right? You don't want to be stone-faced and steadfast because the market is dynamic and you need to be dynamic too. Now, with that said, so if it breaks lower, right? Well, there's a 50% retracement, that 50% hold level that coincides with this 50-period moving average. So 30, we'll just call that 37.20. 37.20 breaks. These are like cattle fences, right? They're meant to herd, you know, and a cow breaks through here, he's probably going to 36.99. We'll call that 3,700, right? Cattle breaks through here. It's my thought that you're going back somewhere in this zone to 36.48. If the cattle break loose, your target, if you break 36.50, your target is 35.92. Off of this 30-minute setup. And so, yeah, you take out 38.14, you're probably making a move. We'll start taking the chart up a little bit higher. So we're on 30-minute, let's go 78-minute. If you break 38.14, we'll just call it a zone, right? If you break this zone here, you look for a gap fill up to this 3,900 zone. 38.14 gets broken to the upside. Try to look at 3,900. But if you can't clear this level, then I think that's the direction you travel. Well, what could drive? See, everything I do typically builds one upon each other. It's about a process, right? And that's over the, since 2014 when I've talked with you, all I want to do is give you a process so you don't need me, right? You want to come back because we're friends, we talk through these videos, you DM me, but I want to give you a process that's repeatable and predictable so you know when the process is working, and when it's not working, you know what levers to change and how to change them because it's part of a process. And so, well, what drives this SPX chart? Let's get this to a daily, and let's put the US dollar in here. This is the chart that you absolutely, positively need to be watching. And let me show you why. So if you look at, and I've got like a PS, like a one super last thing to show you at the end of this video. So here's a 5-minute chart of DXY. And look here, man, like DXY, like what happened this morning? And you're like, how can the market go higher when Powell's talking recession, TM? And I say, you know what, that's the market, anything can happen. But look at what the dollar does. Did Powell have some kind of lever to pull the rug out under the dollar? Because when Powell talked, the dollar came off. And when the dollar came off, what did SPY do? Look at that. The SPY rises like a phoenix from the ashes. It's all dollar, 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 dollar. You have to be watching the dollar relationship. If you're not, I think you're missing part of the picture. And so look at this dollar. So look at this at 13.15. You know, the dollar at 13.15. The SPY peaks, but then it starts coming off. Like this is, you know, like, well, Tim, how much did it come off? We'll get our handy dandy drawing tool and I'll show you. So let me see if I can get there we go. It came off over 1%. The SPY came down over 1%. And what would look like it was going to be this great close, this happy close, shiny, happy people holding hands type of close, if you remember that song. There's REM. And so it's the dollar. So we'll look at 13.15 on the Dixie. What did the dollar start to do at 13.50? Where's the, oh, the dollar right here starts rising. And it's that, well, team, that is too simple. You can't make this so simple. I need complexity. I need to sound like a big brain. No, man. What we want to do is take the complex and make it simple and digestible so everyone can do this. We can democratize the information so we can all benefit. That's the power of all this together, what we have, stock nerds. And so the Dixie is what you want to be watching here. You got to watch that, because if the dollar starts taking off again, and well, where is the dollar in time and space? Always best to have situational awareness. Remember, it's your capital at risk. So you should have situational awareness. The dollar is super bullish here. Look at this. It's sitting right on the 8. It's held the 21. If the dollar were to advance and come back up to recent highs, let me get that out of the way for you. This is a daily chart. If the dollar were to come back up to recent highs, what do you think, sweet Jesus, is going to happen to the markets? Right? And so can we take this down to smaller time frames and look? And can you have a process at home? Remember, it doesn't have to be guessing or haphazard or just randomness. You can absolutely apply rules and have a process. This, my friends, is a bullish pennant on a 4-hour chart. Let's keep walking it down. Let's go to a 78-minute chart. Okay, sell off. All right. Not really much to glean from that. 30-minute. Not really much to glean from that either. And so right now, you, my friends, we are at the mercy of the dollar. Here's the dollar on a daily chart. And how strong is the dollar? How strong is the US dollar? Here's the mean. And if everything reverts back to the mean, whether it comes up in price or it falls in price, meaning the moving averages come up to meet price, this hasn't taken out the mean recently. So if it wants to trade higher and reach up and get that second, and could it get to the third ATR? Like it whisked up here and here and here, and like just a whiskers away there and here. You go back and look at what happens as the ascent is being made. What is the SPY doing when the ascent with the dollar is being made? You do that work and then report back. And so if it were to surge higher, you're probably going to see metals. Metals will get pretty hurt, most likely. And you'll also see the S&Ps. That's the problem with metals right now, right? Strong dollar. And so this is a super interesting moment in time for market participants. Absolutely. Now, I promised you one super duper, one last thing. And so it kind of leads to a little bit more of my bearishness here. And so, you know, let's look at the stocks together. This is not healthy. Okay, this is one of those cyclical bullish type things. If it's bullish, it's leading, right? And the world seems happy and technology seems happy, and this is not bullish. You know, like look at today's action, down 1%. Okay, just do this on a 5-minute chart, and we'll look at a couple individual names here. Recovered off the lows, I guess you could call that bullish. But let's look at the Nasdaq. Like we haven't looked at the Nasdaq tonight together, you and I, and so. The Nasdaq finished, you know, down 0.15%, no big deal. But look, if the SOX can't get out of its own way, I'm not saying that the SOX collapses here, the whole market collapses, but man, you need some of these stocks to do like NVIDIA. You need some of these stocks to do well and catch a bid if you want price to stabilize in these indices. Look at NVIDIA here. It's a big component of the Nasdaq and the S&P 500, and this is not bullish, my friends. And so you look here, let's just walk it down, right? 195-minute chart, 78-minute chart, 30-minute chart. I mean, I guess this 30-minute chart, you could say it held its gap up. That in itself is bullish. Overall, though, not too good. And then this one stuck out to me too, LRCX. Yeah, like You know, can't catch a break at the 5 here. Can't catch a break at the 5. Like, look at this. Can't catch a break at the 5. 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 Once this pattern was broken here, back at the end of May, beginning of June, right? And so I'll tell you, if you see those types of stocks leading, the market probably does make that push higher, but not bullish at all here, in my opinion. So I think, you know, order of precedence $1, obviously watch. And I think that these chip names are something you might want to keep looking at too, to see if they give you a clue as to what's going to drive market direction here. But we'll see. I've got Friday with you. We'll talk about it all on the podcast. And listen, with that, my fellow stockholders, market lovers, you know I love you. So if you have any questions, concerns, just send them my way. TimRevereAsset.com or find me, in fact, on Twitter. With that, I will see you at the next update.